This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Crude production from Iraq, Kazakhstan, and Russia has declined in compliance with OPEC Plus production cuts, supporting a modest near-term upside to Brent prices, Goldman Sachs said. Saudi Arabia is more likely to extend oil production cuts because of the recent price drop, and we now think that oil production cuts will last until April 2025 instead of January, the investment bank said in a note dated Tuesday. OPEC Plus is discussing a further delay to a planned oil output hike that was due to start in January, two sources from the group said. At its most recent meeting on November 3, OPEC Plus agreed to delay a planned December output increase by a month.
Russian gas exports via Ukraine to Europe as well as nominations, or requests, for supply to Austria from Slovakia were stable on Wednesday, data from Gazprom and transmission system operator Ustream showed. Russian gas flows through Ukraine to Europe have been generally stable for the past year, while the route is expected to be closed off before the transit deal with Moscow and Kyiv ends on December 31. A person familiar with the plans said Russian energy giant Gazprom was making the assumption that no more gas will flow to Europe via Ukraine after the last day of the year in its internal planning for 2025, as the military conflict rages on.
Moving on to the top news in the energy sector.
Oil producers in Canada and Mexico will likely be forced to reduce prices and divert supply to Asia if U.S. President-elect Donald Trump imposes 25% import tariffs on crude imports from the two countries, traders and analysts said. Two sources familiar with Trump's plan told Reuters that oil would not be exempted from potential tariff hikes on imports from Canada and Mexico, even as the U.S. oil industry has warned the policy could hurt consumers, industry and national security. The United States accounts for 61% and 56% of crude exports from Canada and Mexico, respectively, ship tracking data from Capella showed.
Oil prices held steady on Wednesday as markets evaluated a ceasefire deal between Israel and Hezbollah while also anticipating Sunday's OPEC Plus meeting, where the group could delay a planned increase in oil output. Brent crude futures rose 32 cents, or 0.44%, to $73.13 a barrel by 0932 GMT, and U.S. West Texas Intermediate crude was up 33 cents, or 0.48%, at $69.10. Both benchmarks settled lower on Tuesday after Israel agreed to a ceasefire deal with Lebanon's Hezbollah. The ceasefire between Israel and Iran-backed Hezbollah came into effect on Wednesday after both sides accepted the agreement brokered by the U.S. and France. Next, we have the top news in metal markets. Saudi Arabia on Tuesday agreed 9 investment deals in metals and mining worth more than 35 billion rials, $9.32 billion, with companies including India's Vedanta and China's Zijin Group. The deals were announced during the World Investment Conference in Riyadh by the Global Supply Chain Resilience Initiative, a government program under the Saudi government's National Investment Strategy. The kingdom's growing mining industry is part of the Vision 2030 plan to diversify the economy and cut reliance on fossil fuels. The government hopes to attract $100 billion a year in foreign investment under the plan by 2030, achieving just over a quarter of that last year.
Prices of iron ore futures strengthened for the third straight session on Wednesday, as firmer steel output outweighed a raft of weaker economic data in top consumer China. The most traded January iron ore contract on China's Dalian Commodity Exchange ended daytime trade 1.08% higher at 792 yuan, $109.19, a metric ton. The benchmark December iron ore on the Singapore Exchange was 1.11% higher at $103.70 a ton by 0723 GMT.
We will now look at the top news in the agricultural sector.
Turkey has scrapped an 8% customs tax on imports of oil sunflower seeds within its set quota, according to a presidential decree published in the official Gazette on Wednesday. The country had in August set a quota tariff of 8% customs tax for 1 million ton of oil sunflower seeds, or 20% customs tax for its equivalent of 400,000 tons of crude sunflower oil. This tariff would be valid between January 1, 2025 and April 30, 2025. With the new decree, the government scrapped the 8% tax on imports of oil sunflower seeds, while the tariff for imports outside the quota was cut to 12% from 27% for most countries of origin.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.